Okay, hey everyone, welcome back to the Stock State. I'm Next Financial Advisor, and today I'll be talking about Salesforce stock, which I feel is one of the blue chips that has a high chance of minimally 2xing within the next 5 years. It's also a safe haven, looking at its cash flow and its business model. Okay, so the question is, is it a buy at today's levels, especially after the huge drop? Should we wait for it to drop further? All of these questions I will answer as I bring you through today's video, where I walk you live throughout my thought processes and what I think about this in comparison to other stocks itself. Let's get into it. Okay, so firstly, looking at the charts itself, Salesforce has a huge drop after rallying, after huge growth estimates has been done. It has been rallying, consolidating around these levels, but then when they have announced a huge project, to acquire Slack in a $27 billion deal, this actually has a huge impact on the stock price itself, and it caused this massive drop down, and break past the 100 moving averages down here. So is it a buy at these levels? Can it drop further? So these are the technicals which I'll revisit at the end of the video, so stick around till then. But for now, as this video is mainly a valuation video, I'm going to talk about its valuation in comparison to its peers and what is my future price forecast for the stock. So let's go straight into it. We're going to go over here and we're going to look at Salesforce stock. Salesforce stock is a CRM stock, which is a customer relations management software, if you do not know yet. So its market cap is currently a huge market cap at $200 billion. Its competitors like Adobe, also huge market caps, $200 billion. Microsoft, $1.6 trillion. Oracle as well is almost $200 billion. All of these companies in this space are actually pretty huge. And as we look down, so Salesforce, right? Salesforce has been having a valuation. Now we look at its comparisons as its valuations amongst its peers. Salesforce has a pretty decent PE ratio. Looking at the PE ratio trailing 12 months. FY financial year 1, 2, 3. We don't look at the individual ones. We just look at the trailing 12 months. For a simplicity's sake, we look at this. It has one of the smallest PE ratios. And if the smaller the PE ratio, it generally means that it has a very nice value. So the lower it is, that means people are actually not paying as much for this stock, which can normally means two things. It can either mean that people are not really confident in this stock, or it just is pretty cheap. So the only ones that are beating Salesforce right now are Oracle, which is absurdly low PE ratio. But I'll explain why. Why am I not choosing Oracle? There's a very good reason why. But judging basically based on valuation, right? Salesforce, Oracle, and Microsoft seems pretty good. Then we now look at another important metric that I always use as well, which is price to sales. Price to earnings is the amount of money that the company gets, right? From the total revenue minus its cost and its bottom line, which is all operating costs, everything it takes to make the product, to sell the product, to its administration costs. So these are the earnings. Then the sales itself is more of the revenue. For my own personal investing strategy, I feel that sales are actually much more important than the earnings itself, because sales represents the total amount of money they are bringing in. Once they are able to generate a lot of money in, the cost itself is easier to take care when they are able to scale at large. So when you look at the price to sales ratio, right? We can look at that Salesforce is actually one of the lowest out there. It's currently at 9.81 of price to sales ratio. Compared to all the other stocks itself, like now Workday. Then again you see like, oh my god, stock estate bro. Look at this. This is so low. Oracle has even lower price to sales ratio. Then why shouldn't we just buy Oracle instead? So let me explain again. So you see, now you can see that the only thing that's beating Salesforce is actually Oracle. Sure. Then now we go down all the way again. We look at its growth. Growth, which I said again, is a very important metric that we're going to use later for our future price forecast. Look at the revenue itself. Looking at the revenue year over year, as well as the CAGR, as well as the forward. There's pretty a lot of metrics right here. There's a lot. So what I am here to do right now is actually to streamline the process and actually pick one out. So let's look at the year over year first. It has one of the highest, I would say. Yes, the highest. Okay, the only one beating it is actually Now. Okay, NOW. Oracle. Okay, so first up, you can see why I'm not really choosing Oracle, although it's so cheap. Okay, a stock can be cheap. Okay, but does not mean it's good. Okay, it can be cheap, but it's cheap for a reason, because it's bad. Okay, there's like a difference between a stock that is like okay, let me give you an analogy. Okay, it's like you're buying a Game Boy. Okay, then the Game Boy is like scenario A is a guy which buys a Game Boy, but at a discount at a fire sale. Okay, but the Game Boy is perfectly fine. So its original price at $300, then now he bought it at $100. But now, in comparison to he's buying a cheaper Game Boy which is very, very low quality at $100. Okay, which one would you buy? Of course, the better one at a discount, right? So Oracle is like that cheap Game Boy which will spoil like in 2 days after you bought them. Okay, because you see the revenue growth is trash. It's trash. Okay, so that's why I'm not actually looking at Oracle. Okay, the only competitor I can see is actually Microsoft. Okay, but however, Microsoft is actually having slower growth than Salesforce, and that's why I think Salesforce is pretty good as well. So revenue growth, Salesforce, yes, pretty good. Okay, now we look at the profitability. Okay, profitability, all of them, since it's a CRM software company, right? It has most of them have pretty huge gross profit margins. So all of them way above the 50% levels. As I said, that this company, I feel like it's a safe company, it's a blue chip company, but it has so much more room to grow. Okay, great. Profitability wise, I think it's great. Okay, now we look at the income statement. Okay, income statement wise, okay, yes, net income doing okay. I think it's comparing to all its peers wise, okay, it's pretty decent as well. Okay, now we look at the balance sheets. Okay, why do I think that this company is pretty safe per se? Okay, when we want to think of we as an investor, we invest in a company, it's not just about the future growth as well. And for me personally, it's about how much risk do I have to take in relation to the future growth that it has. Okay, as an ex-financial advisor, when I plan my portfolio for my clients, I do not want to, and I actually can't expose their portfolio to a huge amount of risk. So whenever I think about future growth, I have to take into account that, is this company safe? Is this company having a chance of going bankrupt? And to know well is the company doing, we have to look at its balance sheet. Okay, the balance sheet itself, two things I actually look for. One is the total cash, one is the total debt. Okay, the total cash itself is, for CRM, is 10 billion, around 10 billion. Okay, total debt is around 6 billion. Okay, when the cash is much more than the debt, it's a good sign. Okay, it's a good sign. Okay, so it's pretty good. Okay, look at Adobe as well. Okay, total cash to debt, it has still maintaining very well, has 1 billion over cash extra. So I think it's doing pretty well. Okay, now a little bit more dangerous. Okay, Workday roughly around there, and then you see Oracle with $42 billion cash. Okay, that's why sometimes you don't look at metrics in isolation. If you look at it in isolation, like, oh, it's cash, right? See, he has 42 billion cash. Okay, you have CRM is 10 billion in cash. Okay, then you're like, wow, then we get Oracle is the most safe one. Okay, but you can't just look at it in isolation. Okay, you have to look at it together. So now you look at it, debt is debt itself. So it's $70 billion in debt. You get my point. Okay, very shady. Okay, I will not invest in Oracle because firstly, its growth is shit. Secondly, its debt is so much more than its cash. I worry for the long-term prospects of this company. So although it's cheap because it's bad. Okay, then Microsoft itself. Okay, just look at Microsoft again, another very famous blue chip companies, right? Huge cash, huge debt, but its cash is more than ×2 of its debt. So if you really want to invest in like a safer company that has massive growth, that you don't want to think about it much, Microsoft actually is a pretty good option as well. Although in my own opinion, right, I feel like CRM has so much more room to grow than Microsoft, which is due to the law of large numbers, which I'll explain later also. Okay, so pretty good. Okay, look at all this is pretty good. Okay, so total cash, total to the total debt, I feel like Salesforce is doing really, really well on that aspect. Okay, so now all of the valuations and comparisons are over. You can roughly know why I so supportive of Salesforce, because firstly, it is cheap. It is cheap. Okay, looking at the valuations wise, okay, its price to sales ratio is cheap, and it's cheap with a good value, with a good valuations. Okay, there's other stocks itself that have pretty good revenue growth as well. Like Adobe has pretty similar revenue growth to CRM, which you have seen just now. It's around 30%. But however, it's so much more expensive. Okay, it's 18 times compared to 9 times. It's so much more expensive, and hence that's the reason why I do not really want to. I choose Salesforce over Adobe. Okay, and such a sidetrack a little bit. Okay, when you look at the deal, right, when they buy Slack. Okay, I love it when companies acquire another companies that I think will work very well in the future. Okay, Salesforce currently, it's a very B2B kind of business setting. Okay, but when they buy Slack, right, and they integrate Slack, which is a B2C business setting, right, I feel that it gives them more exposure to the markets outside of their normal market range. And this will actually increase their revenues and move it out of that stagnation zone. Okay, because I can see Salesforce as a company slowly start to stagnate a little bit. Okay, but this move will actually open up revenues for them. And I see it as a very, very good thing. Okay, so if you want me to elaborate more about its fundamentals, okay, and what this acquisition will mean for them, okay, then that will be for another video. Okay? So if you want me to do it, you have to leave it down in the comments below. Okay, so now back to the juicy part where I'm going to calculate the future price forecast, okay, which is what a lot of people want to hear about. Okay, so now we're going to look at the future price forecast and how I calculate them. Okay, so now I have read through the entire sales transcript of Salesforce. Okay, so let me just take you through the most important part. Okay, so one of the important parts is, okay, total revenue for third quarter is 5.242 billion, up 20% year over year. Okay, important part. So if they are doing 20% year over year, and I'm forecasting that they can actually break past this level, they can actually make much more money in the future because of the acquisitions, because of the resiliency of their business model. Okay, you can see that their subscription and revenue growth by cloud grew. Sales grew 12%, service grew 21%, markets and commerce grew 25%. It's growing very strongly even during this virus, this crisis, which shows a lot. So that's why I say I feel very comfortable putting my money in this, because it shows that this business are resilient. Okay, and we look at its total revenue trailing 12 months is 20 billion. Okay, 20 billion growing at a 20% rate. Okay, so now we do the calculations wise. Okay, so I'm calculating it in a time frame of 5 years. Okay, in 5 years. So 5 years. Okay, so let's assume that it's growing 20% every year. So it's 1.2, right, per year. So I compound it in 5 years. Okay, in 5 years, and I'm putting a multiple on it of its total revenue. Okay, not this one. Total revenue, this one. Okay, total revenue of 20 billion. Okay, which is, I round it up to 20.3 billion. Okay, so assuming that it's able to grow its rate at 20%, right, year over year for the next 5 years, right, which is, I would say, is actually pretty conservative. Okay, it can actually go to, okay, 50 billion. Okay, 50.2 billion. Okay, $15.2 billion in revenue by then, in 5 years, at the end of 5 years. Okay, I can see it growing to that level. So, and what does this mean? Okay, so when I put a multiple on this, right, how do I put a multiple on this? Okay, we put a multiple on this when we look at its price to sales ratio, which is 9.81. Okay, so now we put a multiple on this, so 5.3, right? Let's do this. Okay, 5.3. 5.3. Oh, what am I doing? Okay, just let me cancel that again. Okay, it is 50.3. Okay, 50.3 billion. Okay, this is $1 billion. $50.3 billion. Okay, and we add a multiple of 9.81. Okay, so in 5 years' time, let me repeat myself. In 5 years' time, I can see this company growing to, okay, this number as a market cap. Okay, around $500 billion, which when you compare it to the current price of Salesforce, right? Okay, Salesforce current market cap, which I've been showing you just now, it's around 200 billion, right? Okay, it can grow to at least a $500 billion company. Okay, and why I say it can minimally 2x. Okay, so okay, worst case scenario. Okay, I discount this. Okay, worst case scenario. Okay, let's give a margin of safety. Okay, like something bad happens. Okay, then it loses, $100 billion in market cap. Okay, it's still a safe margin of safety of 400 billion, and which is how I come up to the estimate of how is it able to times 2. Okay, so from its current market cap of 200 billion, I can see in 5 years growing to 400 billion, which is 2x. Okay, and I say that's very safe. That's considering today's climate and considering a margin of safety. So this is my future price forecast for next 5 years. So looking at its current price now at 200, right? 200. Okay, it's in 5 years, my target price for this will be 440 price per share. Okay, you can quote me on this. Okay, I feel like it is able to minimally, hit that level. Okay, or even more by then. Okay, and really, I'm very excited by this acquisition itself, because I really do think it's a very good combination. Okay, you can do your own due diligence on that, but I'm really excited for it. So me personally, I wouldn't mind putting a lot more of my portfolio into Salesforce. Okay, and yeah, so why then you can ask me a question. A lot of people ask me this question, like 2x in 5 years. Oh man, like it's not a lot, look at other big companies like Neo, this kind of just smashing through the moon, right? Okay, this kind of question is a very interesting question. Okay, but however, okay, you need to know that 2020 is a very weird year. Okay, normally for a company, right, to grow to that level, to grow these kind of prices, right, you have to take a very high risk on that. Okay, and companies don't just 2x, 3x, 4x over a few months. Okay, that's not the norm. Okay, just this year is a pretty weird year itself. Okay, so normally companies like this, right, there's this life cycle that they have. Okay, this is the infancy stage. Okay, where they just IPO. Okay, the price are and this is the part where it's a growth. A growth is massively incoming, and this is where a lot of people call it. These companies like the growth stocks, okay, the growth stocks itself. So companies like Neo, okay, which is recently start turning profits. Okay, a lot of companies which are growth stocks per se are in this category where they just recently start turning a profit, and they actually spike to grow massively over the years. Okay, and I think Salesforce is roughly reaching the end of the growth cycle around here. Okay, but I feel that's why I say that the acquisition by Salesforce, right, to buy Slack, it might actually prolong this growth rate. Okay, so they actually grow further more than that. Okay, but what is the advantages that why would I choose Salesforce over growing companies like Square, this kind of companies? Because safety. Companies that are the earlier stages of infancy, right? They have a huge more potential for growth, but their cash on hand, their a lot of their money is given to R&D, and their business model is still establishing, and they're still figuring out what works, what doesn't work, and expanding to emerging markets. And a lot of things can go wrong by then. Okay, we need to think about both sides, the good and the bad. Okay, so there's a high chance of them failing, but that's why they are able to justify their prices, because although a lot of things can go wrong, but a lot of things can go right. So a lot of investors tend to look at the bright side, which is a lot of things can go right. So then they start projecting forward what this company can grow to, and that's why all of the growth stocks has been going haywire. Okay, and for a company like Salesforce, right, that is very safe, but I feel like it's much more safer because it has already established business model, growing consistently. Okay, you slowly hit a thing called a law of large numbers, which is when the law of large numbers indicates that a large entity that is growing rapidly cannot maintain that growth pace forever. Okay, all growth stocks, after a while it will slow down, then it will start to mature and die out unless they start innovating. Okay, and I feel that Salesforce is one of those companies that are very established already and trying to extend their growth rate to further. Okay, and that's why, because it is safe and because it has potential for higher growth, and that's why I'm choosing this over the other growth stocks. Okay, but that's not to say that I'm putting 100% of my portfolio into this. No way. Okay, I'm definitely still getting the other growth stocks as well. I'll be like, oh my god, why are you just buying this? There's other stocks that can 2x, 3x, 4x. Yeah, I'm still buying those, but I'm position sizing my portfolio. Okay, those that are higher risk, I'll put a smaller amount. This is a higher amount. Okay, so yes, okay, I don't want to dive too much into this. Okay, so let's go back into the technicals itself. Pretty good. Okay, so where will I look to buy? Okay, okay, so from this, right, it has a downward pressure all the way down here. Okay, insane downward pressure all the way here. Okay, I can see the RSI. Okay, the RSI is an indicator whether to tell whether a stock is oversold or overbought. Okay, at $31, at 31 points, it is pretty darn oversold. Okay, so I would actually start taking a position here, a smaller position here, and I can actually see it going both ways, which is, of course, it only can go both ways, right? Okay, so it can either spike up from here, okay, or it will go down towards this support level over here. Okay, I can see it dropping to this support level over here. So at this $209, $210 level. Okay, so there's two ways it can go. Okay, it can either spike up from here from now on because it's just so darn oversold, and or it might just break further into this support level where I can see it rebounding. Okay, as I said, these technicals, all this kind of thing, just to provide a guide, for you to set your plan. Okay, how much you want to put in at what period of time. Okay, it is not a crystal ball. Okay, it does not tell you, nobody in the world can tell you whether this will spike up from here, whether this will destroy up to the ground. Okay, so that's why we look at the fundamentals and its valuations and just use technicals as a subsidiary, to time your entry as well as possible. So for me, I'll start a small position here. Okay, I'll probably put, example, you want to put your total portfolio, right? You want to put $10,000 in this. Okay, so I would suggest start putting around $3,000 because this is so oversold. Okay, then if it drops down further, you can just average down. Okay, but however, if from here, right, it starts rebounding, having a confirmation that it's reversing back up again, okay, then you just put the rest to average up. Okay, so that way, when it drops further, you won't feel too bad, that you have bought it because it's going down further. You have still more in the tank to average down, in case anything happens. So I never advocate, putting one shot all your funds into a stock in one particular point of time. Okay, so that's it for today's video. Okay, I hope you really enjoyed it. Okay, smash the thumbs up button to give the algorithm a nice boost, and subscribe to this channel, okay, for more videos like this. Okay, and I also do another series called the Quick and Dirty Guide. So if you really want to me to look at something, right, the stock, right, I'll go and look it up. I'll break it down in 5 minutes, and I'll publish a video. So give a thumbs up again if you like this kind of live training session, and I'll see you again in the next video. Okay, stock and stay up.